Hello traders and welcome to another video review. Today is Monday, the beginning of the trading week, 18th of the January 2021. Let's take a look at the Forex calendar and then we'll of course do some technical analysis as well. So, the economic calendar is showing us that there were some data released overnight and they were quite important. We got the real GDP data released from China and bunch of other news and data from China as well. So for the fourth quarter, GDP from China was worse than expectations, 2.6% for the quarter. Forecast was 3.2 and the previous reading was 3%. So very bad reading from the China. The real GDP year to date is better than expected, 2.3% versus the forecast of 2.1%, and the previous reading was 0.7. So overall, the GDP is not that bad. It's 2.3%, so they are still developing, but the last quarter was bad. Last quarter, the fourth quarter was bad. So all in all, we should see some kind of a reaction on the gold and on the currencies that are connected with the China, like Australian dollar, Canadian dollar, New Zealand dollar. The industrial production was better than expected, 7.3% versus the 6.9 forecast, so that's okay. Retail sales a little bit worse than expected, 4.6%, and the forecast was 5.5%. So this is a little bit of a surprise for the market, but not that much. And unemployment rate is still in line with expectations, 5.2% in China. In Japan, industrial production was worse than expected, minus 0.5% versus the forecast of 0%. Okay, that's the Japanese industrial production data, and what we are expecting during the London session. We got gross domestic product from Italy, and we got the Bundesbank monthly report scheduled for release at noon today. During the New York session, we got data from Canada, housing starts, and foreign securities purchases for the month of November. So this would be kind of interesting to see, but this kind of data don't have much impact on the market. And deep in the night at 10 o'clock p.m. we got the business confidence indicator from I guess this is New Zealand. Yes, from the New Zealand for the fourth quarter, and the expectation is that the business confidence indicator will advance from minus 40 to minus 30. So it can be it would be good to take a look at the New Zealander as well to see how it will react. So it looks like a very quiet session today. No major data are scheduled for release during the London and New York session. I think the most important data had been released already. They were, of course, from China. So let's take a look at the gold first. On the gold market, this is daily time frame chart. As you can see, we broke out of this channel. We broke out of the technical support. Then the support was the resistance. 1865 is the key level in the short term for the traders. But after the data from China was published, the gold had made a new deeper low below the 1817, and the low was actually $1,809. So if this candle will turn red at the end of the day, eventually, then of course we can expect that the market will plunge even more towards $1,762. This is the next target for the bears on the gold market. So please pay attention to the gold. Let's take a look at silver as well. The spot silver market is, as you can see, very similar to the gold market. The recent rally above the level of 27.35 was very short-lived. The new high was made at the level of let's say 27.88, but since then, of course, the market just plunged lower, and the lows had been made around the level of 24.31. The recent low from today, of course, had been made so far at the level of 24.07. So it looks like we are getting lower on the silver market as well, because this is more than, I guess this is more than 50% of the retracement from the last. Yes, this is more than 50%. Actually, it's still 61%. So 61% is the retracement of this last wave up. 24.13. The low was 24.7. But for now, of course, the Fibonacci retracement had provided some kind of a bounce for the silver. But if there will be another attack on the 61% and the bearish pressure intensify, we can go as low as the level of, let me just put it on the chart, somewhere around the 23.48. So that's the next target for the bears. Another technical support is, of course, 21.84. Please notice that if we break below 23.48 on silver, then we are back below the long-term trend line, and this is the fake breakout that didn't really work out. So please keep an eye on the silver as well. Of course, the technical resistance for the price is seen at the level of 25.84. So without any kind of a sustained breakout above this level, we cannot even test the lows of the 8th of the January that were made on 26.60. So first 25.84 to be tested. Okay, so Australian dollar, I think this is a key market right now. There you go. Recent high 7,814. Let me just take a look. And 18. Okay, let's just move this line a little bit higher. 7,818. Come on, let's move it. There you go. So that was the recent high. Please notice that was the top for the wave 4. We got some kind of a consolidation, and the last low was just below the recent low, 7,806, and since then we got the bearish engulfing. We got some kind of a dark cloud cover here. Then we have a consolidation. As you can see, it's the biggest consolidation in the whole up move. So it's kind of telling us that there is some kind of a time signature for this market. And today we are testing the lows. We are testing the lows of the level of 7,674. The target is 7,643. If this level here is violated, if the zone between these two levels is violated, then we go straight down towards 7,483, 7,463. This is the target for the correction. All right, so this is well 150, almost 200 pips. Almost 200 pips is to be gained here for the traders. So please keep an eye on the Australian dollar. Nice corrective cycle is in progress. And the New Zealand dollar. Let's take a look at the New Zealand dollar. There you go. It looks like we got some kind of a 5 waves here, but the first wave is of course some kind of a leading triangle. So this is the first wave 1, 2. This is the third wave 4, 1, 5, something like this, and then we are making the correction. Of course, we can adjust our levels. This is the resistance 7,236, but we are already down below the level of 7,151, and it looks like we are heading towards the level of 7,056 pips and 7,002 pips. So those are the targets. The key level here on this market is at the level of 6,972, 6,941. Those are the two key levels. Please keep an eye on them if we get there, because if the market would broke up below this zone, then we have the short-term top, we have the up move completed, and then we will of course deepen the correction towards the 6,753. So please keep an eye on this level as well. For now, we are just getting lower on the New Zealand dollar. Let's just take a look at the US dollar index, because if those two are dropping, then there you go. Then the US dollar index is supposed to be going up, and as you can see, this is apparently the case. As you can see, we are getting closer towards 91.1, so this is the key level and the top for the wave A. Then we should expect some kind of a pullback, some kind of a consolidation in the wave B, and then 91.72 or even 92.44 will be tested during the pullback. Let's just put some Fibonacci retracement levels here. Maybe it would be a kind of optimistic to put them there right now, but let's do this. We will see what are the levels. Let me just adjust the levels. We need a 38% as well. There you go. So 38% 91.30, 50% 91.95, and 61% 92.60. So if the 92.60 is clearly violated, then we go higher towards 94.27 and then 94.71, because that would mean we got some kind of a deeper retracement, deeper correction on the US dollar, or we even can start a new uptrend, which means that this will be wave 1, wave 2, wave 3, wave 4, and 5. We will see what will be the structure during the bounce, during this correction, and then we will of course adjust our scenario accordingly. So that's everything for me for today, I guess, for the first day of the new trading week. Thank you very much for watching me, and I hope I'll see you guys tomorrow for another technical analysis. So take care, guys, and bye-bye.